Did you know that student loan forgiveness could trigger a huge tax bill? Even if the federal government says it's tax-free? Yep, it's called the student loan tax bomb. And in some states, that bomb is quietly ticking. And unless Congress acts for 2026, it could blow up in millions of borrowers' face across the country. And this video is going to break down what exactly is the student loan tax bomb, which states are taxing forgiveness right now, there's 6 of them, and what you could do to prepare in plain English. There's no tax jargon. I'm not a CPA. That's a disclaimer. It is just extensive research I've done. I will screen share a map from the Tax Policy Center in this video. And I want to make sure you're not surprised by any tax bill in your state and you're getting the relief you deserve. This video will be broken down into sections. What is the tax bomb? Why is it temporarily not taxed at the federal government level? What is the issue with these 6 states? Why some states tax it? And lastly, what happens after 2025 if Congress doesn't act, and what can you do about it? That's the breakdown of this video. Again, if you like this content, please like and subscribe and share our videos. Okay, the federal tax window ends at the end of 2025. This means that if Congress doesn't extend it, anyone who gets forgiveness in 2026 or later, even the income-driven repayment plan, bar defense, will be paying federal income taxes and now also possibly state taxes, which means after December 31st of 2025, you will also possibly be taxed. So let's dive right in. Section 1, what is the tax bomb? Okay, the tax bomb is simply saying that if your debt is canceled, the IRS normally treats it like income. So let's say you owe $30,000 and it's forgiven, and the government treats it like you earned $30,000. That means you owe taxes on it. That's called the tax bomb. However, the government has passed legislation to not tax this student loan forgiveness portion, and that's why it's tax-free at the federal government right now, okay? So why is it temporarily not taxed at the federal level? It's because of the American Rescue Plan that was passed under Biden, where all student loan forgiveness from 2021 through 2025 is tax-free. And like a lot of tax laws that are passed, it's done temporarily and sometimes it's passed permanently. That's what I think the Biden administration was hoping for. And I think they were hoping that Biden would win a second term and be able to pass legislation that would make it more permanent. However, he didn't, nor did Kamala. Therefore, now we're stuck with not renewing this forgiveness on the tax bomb under the Trump administration, right? The one big beautiful bill didn't either. So it expires in December 31st of 2025, like a lot of other tax credits that passed under Biden, like the solar energy credit, same thing, expires December 31st, 2025. I can go on with a whole list of other tax benefits, but this video is about the student loan tax bomb. So let me get back. So if Congress doesn't renew it, the forgiveness that happens in 2026 or later would count as income, thereby being the tax bomb, right? So what is the issue with these specific states that I'm going to break down now, and why are they taxing this student loan forgiveness? So even though the federal government says you don't owe a tax, your state might not agree. They might say, hey, this is still treated as income and you're going to be taxed like it's income. Every state has their own tax codes. Some states automatically follow federal rules and others don't. And that's where things get tricky. If your state hasn't updated their law to match federal exemptions, then you could possibly owe state taxes on forgiveness. So let me go to I'm going to screen share a map from the Tax Policy Center. And this map was created in 2022. So I've obviously done the research so I can update this map. So the blue are states that do not tax student loan forgiveness because they follow the federal tax code, okay? And then the states in orange, this was in 2022. So that's Minnesota, Indiana, North Carolina, and Mississippi. Sorry, I got very confused because they put North Carolina in a very funny spot in this map, but and Mississippi. Since 2025, there has been confirmed that Wisconsin was added to this list, and that Wisconsin was under review. Wisconsin was added to this list. So Wisconsin is now taxing. So the total list comes Arkansas, Indiana, Mississippi, North Carolina, Wisconsin. Other states in yellow, which include Wisconsin, Arkansas, and California, it turns out that the states that were under review in 2022, Wisconsin and Arkansas, decided that they were not going to make a special exemption for student loan forgiveness. So they're taxing, and California ended up working on an exemption that their tax code provided. So California, from my knowledge, does not. Again, each state could forgive some federal student loan forgiveness and not other programs, right? So again, it's very specific by state as well. So let me call out. So let me just go back to some of my research notes and call out. So for example, Indiana, all federal student loan forgiveness is taxable besides loan forgiven under PSLF, teacher loan forgiveness, the National Health Service Corps, and in some cases, total and permanent disability, bankruptcy, and death of the student. Indiana is taxable outside of these programs. Well, the majority of debt is forgiven under these programs. If it's forgiven under regular income-driven repayment, Indiana, you're going to be taxed. And that's why they're in this chart, right? Arkansas, student loan forgiveness is considered taxable under the Arkansas tax policy. That does not include most student loan forgiveness. The exemptions are public service loan forgiveness and forgiveness for total disability. So that is what the Arkansas Department of Finance and Administration said, that if you have PSLF forgiveness or total and permanent discharge, forgiveness for total disability, permanent disability discharge, you will not be taxed in the state of Arkansas under those programs. But if you're getting forgiveness under bar defense or under income driven, you will be taxed. Okay. So I'm breaking down by the state, so we're very clear. Mississippi taxes, this is what an Investopedia research with citation says, Mississippi taxes loan forgiveness. The Department of Revenue told Investopedia in email, however, there's an exemption for debt canceled under the coronavirus and economic security. So the CARES Act, which obviously that has passed. So any debt forgiven in Mississippi at this point is taxable. North Carolina is required to add student loan forgiveness amount back into your taxable or adjusted gross income. So that means, again, they're adding it to your income. The tax policy applies to all student loan forgiveness unless the loans were forgiven in death or total and permanent disability. However, if the student debt was forgiven due to insolvency, the rules are slightly different and vary in a case-by-case basis. So again, if you're filing for bankruptcy, it may be slightly different, right? So again, the state laws are pretty complex and nuanced. But in North Carolina, basically, even if you get PSLF, income-driven bar defense, you're going to have to pay taxes at the state level unless you become permanently disabled, and then in bankruptcy in some cases. Okay, now let's talk about Wisconsin. All student loan forgiveness is taxed in the state, except if it's forgiven through PSLF, death of the student, total and permanent disability, teacher loan forgiveness, and the National Health Service Corps, which again, Wisconsin has pretty generously covered most programs, except again, for income-driven repayment plans, as well as bar defense. Excuse me, tripped on my words there for a second. So if you get discharged through those programs, it's not forgiven. Okay. So that's a quick summary at the state by state level. So also it obviously matters what your tax bracket is and what the state taxation rules are in terms of the amount you're taxed. I cannot do that breakdown in this video because it's very nuanced based on income, based on family size, adjusted gross income, all those factors, as well as all the different credits you get in the state. That's very complicated. Again, I'm not a CPA, but I just want to give a breakdown of these 5 states. And I know I said 6 states because initially California was under review, but it's actually 5 states. California might have some interesting taxation rules to watch out for as well, but for now, they have passed additional laws to forgive debt that's forgiven at the federal level. Okay, so why states tax it? It's pretty simple. States base their income tax on federal definition of income, but if they do it differently, then and they don't automatically update their tax laws to reflect the federal rule changes called rolling conformity, then it literally is an act of their state legislature to make exceptions. And a lot of states have Congress people who have presented it and it's just been rejected. Like it's conservative or they believe it should just be taxed. And so they weren't able to pass exceptions. And that's why these states stand out. If the state hasn't updated their code or they haven't passed it at the state legislature level since 2021, then the old rules remain and any forgiveness is treated as income outside of the exceptions I just previously spoken about. So what happens after 2025? This is what most people miss. The federal tax window ends at the end of 2025. This means that if Congress doesn't extend it, which looks like it's not going to happen, it did not happen under the One Big Beautiful Bill, anyone who gets forgiveness in 2026 or later, even the income-driven repayment plan, bar defense, will be paying federal income taxes and now also possibly state taxes. So I talked about those 6 states, but if your state has rolling conformity and it says we will just tax based on what the federal government taxes, then a lot of the states that are not on the list of our 50 states in the United States will follow federal policy, which means after December 31st of 2025, you will also possibly be taxed. So that's what I didn't say when I broke down the 5 states. If you are an outside of other states, like I don't want to name a specific state. I was going to say Florida where I live, but I don't know specifically if it's Florida. If I don't want to name a state, but any of the states that no, Florida's not going to be it because I'm sorry, Florida doesn't have state income tax. The states that don't have state income tax are safer, but all the blue states on this map, every state that's in blue, if their state law conforms with the federal government tax policy is called continuing conformity, rolling conformity, then those states in blue, you could also be taxed with your annual state income tax return. So keep that in mind. Any forgiveness after December 31st of 2025 in the blue here, which is the majority of states in the United States, Connecticut, Rhode Island, Delaware, Maryland, DC, South Carolina, Georgia, all these states could possibly in 2026 be taxed at the federal and the state level. Okay. I know I went through exceptions, but that's why it's so important. We talk about this tax bomb and what bars can do now if they qualify for forgiveness to get in line so that the likelihood you're taxed on any form of forgiveness is significantly diminished. We don't have much more time because it's now October 29th. Don't wait until the last minute. Don't wait until past Thanksgiving to be worrying about this. If you have paid over 10 years and you're a public servant, now is your time to act. Okay. If you have paid for over 20 years on income driven, now is the time to act. It's more so the time to act in income driven. If you're a candidate for bar defense, I'm going to post a video on bar defense, a breakdown. Please watch it. If you're a candidate that went to a for-profit school and you can get bar defense discharge there, you're not going to get it before 2026 because there's a long review process. But right now, as of right now, bar defense exists and it's not a legislated program by Congress. So I would definitely apply sooner rather than later because you don't want those benefits to be taken away, okay? Regardless of the tax bomb. I just want to give a tiny little shout out on my guide here. Lastly, I want to talk about what can you do about it? I mean, I started going into it, right? I started going into possibly what you could do about it. But whatever state you live in, start researching what the state laws are specifically to your state. Like if you live in a more progressive state, they might say, we'll never tax student loan forgiveness. I don't know. It depends on your specific state, right? Plan for a possible tax bill if you live in a taxing state. Talk to a CPA or a tax pro before forgiveness hits your account so you know how it will be treated and you're prepared because your employer, if you're a W-2 employee, might not be withdrawing sufficient enough taxes to cover that tax bill. So keep that in mind. You might need to make additional payments. And of course, if you're an income-driven plan, check your timeline. If you reach forgiveness before 2026, that's ideal and you should file as soon as possible. So those are my call to actions. If you're not quite sure what plan of action, what is happening with your student loans because you've changed plans a bunch, you've been paying for many years, know that in this video, I'm giving a special to discount our consults. Again, we're not tax pros, but we understand what's happening in the student loan programs. We can answer questions. We can estimate your timeline to forgiveness because the federal government's not doing that right now. And we can help you manage all that. The bottom line is the tax bomb. The tax bomb is ticking. It's a ticking time bomb right now. So if you qualify for forgiveness, apply now. We will keep you updated if Congress extends this tax-free window, and if there's any significant change in any states that advance the forgiveness of taxation clause for borrowers, we will keep you updated. Please subscribe, turn on notifications like this if you're a student loan borrower. And whether you owe taxes or not, book a consult and we can help with your student loans if you are concerned and stressed out by them. I will put the link below. It's very easy to book a call. You can get a free plan in our app.myloansense.com. Avoid the 2026 tax bill. We cannot wait to come to you with more news. Happy almost Halloween.